This is Horizon's Middle East and Africa. Our top stories this morning. Diplomatic pause. Iran and the U.S. agree to stop attacks and resume talks following fresh strikes that threatened oil flows through the Strait of Hormuz. South Korea goes big. Samsung and SK Hynix prepare to announce more than $1 trillion in investments to keep up with demand for AI hardware. Plus, China turns up the heat on the EU, signaling Beijing can withstand a complete halt in trade with the bloc ahead of Commerce Minister Wang Wentao's trip to Brussels. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Happy Monday to you. And let's just see where markets are positioned to start the week. As we know, last week was quite a volatile and choppy one for markets, just given the broader AI trade and, of course, some of the concerns around spending around AI. So we saw quite a bit of choppiness going into the weekend. But right now, as you can see, with U.S. equity futures pointing higher, especially given some of the announcements that we did hear about the pause in hostilities in the Middle East. Still, we will be seeing how much, though, the broader AI trade will be in focus for investors throughout the week. And we're also watching closely what will be a U.S. jobs report actually coming a bit earlier in a truncated week for Wall Street, just given the holiday on Friday. The MSCI Asia Pacific Index marginally up to start the week. We'll get more from Winnie Xu in just a bit. But still, we're seeing a bit of a sell-off still from the broader Asia Pacific Index. Again, off the back of some of that concern around spending around AI-related names and the Kospi Index very much in focus still for some of the major gauges in the region. We have Brent crude on the board there, pairing some of the gains that we saw earlier in the session, up just over 0.6%, almost 0.7% there, to trade at just about $72.49 a barrel. We, of course, are paying close attention to some of the tit-for-tat hostilities that we did see over the weekend in the Middle East. We are going to be digging into more of where things stand, though. But right now, it's looking like a bit of stability right now. When we will just finish off with the U.S. 10-year yield up just a basis point there to trade at about 4.38%. But still quite a lot for investors to focus on this week, including potentially more Fed speak that we will get throughout the week. As I was mentioning, though, we still are paying close attention to how Asia has been trading over the past few hours. We have Winnie Xu, who is in Hong Kong for us, with a closer look at what we've been seeing over the past few hours. Winnie, what have you been watching?
Yeah, good morning, Jen. You are seeing Asian stocks fluctuating quite a bit today as the U.S. and Iran held off strikes. Now, the key thing today, though, is around this rotation that investors are rotating away from these tech stocks that have been really seeing a big run up this year and rotating into the sectors that have been underperforming, especially as we are near the end of the month and also the quarter. And hence, you are seeing tech-heavy Nikkei 225 underperforming the broader topics gauge in Japan. Now, we are in fact seeing for the topics gauge that for every stock that is down, we actually have two stocks that are rising, and the more defensive sectors, the likes of retail and pharmaceutical companies as well as insurers are in fact rising. And the outlier today is in fact in HS Tech, up almost 4% after the gauge slumped into the oversold territory last week. Now you flip the board, we take a look at the Korean market because all eyes are on that upcoming announcement by Samsung and SK Hynix, a potential 1.3 trillion US dollars worth of investment over the next decade. And that announcement is expected for 2 p.m. local time later today. And we are seeing a bit of a sell-off in these two companies also as part of that rotation trade. And hence that rotation away from these names and into the small cap gauge here. Kosdaq here up more than 7% with the sectors including batteries and pharmaceuticals driving gains as well. Back to you, Jen.
Thanks so much, Winnie, and we'll dig more into some of those stories in just a bit. Thanks for that. Let's get back to our top story, though. The U.S. and Iran have agreed to stop attacking each other before peace talks resume this week. The development signals a de-escalation after several days of tit-for-tat strikes tested a fragile truce. Let's get more on the situation with Bloomberg Middle East breaking news editor Dana Krish. Dana, will the ceasefire hold, and why exactly did the escalation happen in the first place over the past few days?
Good morning. Yes, I think the ceasefire will hold. I think both parties do want the truce to remain. And I don't think that these skirmishes that we're seeing would impact that or impact the talks over the MOU. I think the question maybe remains is why Iran targeted this container ship in Hormuz last week. And of course, another one that prompted the U.S. to retaliate and attack Iran. And it seems that the U.S. had to respond, right, because it considered that to be a breach. And then we had U.S. President Trump, he wants to show that they're not going to tolerate any breaches and that they are still in a very strong position and they won't allow Iran to have a free hand anywhere, especially in Hormuz. And that is, of course, maybe at the heart of this escalation this week. And of course, the fate of Hormuz, the free flow of traffic there, will it remain free, given that, of course, Iran's insistence on some sort of fees, and that it isn't clear, of course. I think the worrying bit is, of course, what President Trump posted on Saturday. He said there may come a point that when we are no longer able to be reasonable with Iran and that we'll be forced to militarily complete the job that we very successfully started. So his words kind of leave the door open to more escalation and more skirmishes, but definitely both sides don't want to undermine their positions. But yet again, Iran doesn't want the blockade to return, and neither does the U.S., because they want Hormuz to remain open and have those ships pass through.
Right. And quite all of that really underpinned some of the talks that we are anticipating over the next few days. What exactly can we expect, especially considering all of those considerations you just pointed out there? What is it that you're watching out for over the next few days?
I think we are watching for an announcement on the frozen assets, right? We saw the sanctions waiver is taking place, but the frozen assets is what Iran will focus on, I think, this week. They want to start discussions on this and see the release of some of these assets. They are anticipating about $12 billion to be released to them. And this is, of course, to ease some of that monetary burden as a result of the war. Finance import, begin some sort of reconstruction and pump cash into its economy. Now, President Trump insists that Iran will use that money to buy grains and wheat from the U.S., but we saw Iran last week, rebuffing this and saying we will buy. It is our decision only to decide on what to do with this money. I think the most sticking point will remain to be Hormuz and Iran's insistence on having any kind of administration over it. We saw Oman last week telling, from our own original reporting, telling European allies that it will at some point have to impose fees and that it is under pressure from Iran to do so. So the situation is still very volatile, I would say. Even now with the technical talks, all eyes remain on Hormuz. And of course, those 60 days, if they expire, will Iran impose any fees? Will Gulf countries be able or want to pay? This remains the sticking point, I think, more so than the frozen assets.
Bloomberg Middle East breaking news editor Dana Krish starting us off there. Dana, thanks so much for that. Let's just dig into this a bit more now with Julia Roknifard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, thanks so much for joining us. So let's just get into more of what we were just speaking there with Dana about. Is your expectation that we will see some of these skirmishes and the halt in some of these skirmishes actually hold, especially given we are going into some of the technical talks over the next few weeks? What's your expectation?
First of all, I think it's not unexpected what we're seeing, those skirmishes, because there was a lot of pessimism about the ceasefire that was supposed to ensue the signing of Memorandum of Understanding. And I think it is demonstrating that we are not going to see any agreement anytime soon, because the intentions of the parties, especially on the side of the United States, they remain to maybe, as now I'm seeing, rather maintain a low-intensity warfare. And use the negotiations as a sort of performative measure to maintain it at this low intensity rate, but not more. So answering your question, I wouldn't expect signing of a comprehensive agreement by the end of the 60 days, but also it probably wouldn't be escalating it into a larger warfare like the 40 days that we saw since the start of February.
How long do you expect these low-intensity conflicts to continue without spiraling into something a bit more serious?
For some time, probably for a long time, and maybe until the point that on the military side, the United States decides that there is enough in the stockpile to resume it, if such a decision will be made, because now there is a lot of talk about counting on how much was depleted by this war. So look at, for example, let's look at Syria's example. The intention was to indeed administer regime change. The same intention was there, although later denied in Iran. So it took about 13 years in Syria. We could expect low intensity military pressure around the Strait of Hormuz to continue against Iran, with the hopes that it will help collapse regime at some point.
And yet, Julia, you say that talks over negotiations right now between the U.S. and Iran are largely performative rather than a genuine peace negotiation. What changes that assessment, in your opinion?
How they can become non-performative and substantial.
Yeah, a bit more substantive.
I think for that, we need to, there's something that Iran demands, one of Iran's red lines, and that is inclusion of the Lebanese front, cessation of hostilities, and full withdrawal of Israel from South Lebanon, and we do not see this happening. And even this incident that happened, those so-called skirmishes in the Strait of Hormuz, well, I wouldn't imagine Iran attacking a ship because of what's happening in South Lebanon, because that is paragraph 1, the point 1 of the memorandum of understanding that's not being observed by Israel. So Iran wouldn't probably attack a ship for that reason, but the strike on the American targets in the region could be one of the responses that Iran considers valid at the continued military action by Israel in the south of Lebanon. So this decoupling of the Lebanese front from the Iranian front, in the eyes of Iran, it's a pointless exercise, and Iran is not going to agree for that. So to make the talks substantial, there needs to be cessation of hostilities everywhere, because if that is not fulfilled, later on, Iran is going to try to increase its strategic depth and get at Israel's logistics routes in the Red Sea and beyond that in the port of Haifa.
Well, we'll wait to see how these talks continue throughout the week. Julia Roknifard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, thank you so much for your insights this morning. Now, coming up, we'll discuss the market outlook with Ryan Lemand from Neovision Wealth Management. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Traders are weighing developments in the Middle East, with the U.S. and Iran agreeing to return to talks after fresh tensions over the weekend. Stock futures have advanced while Brent crude has eased from its session high. Let's bring in Ryan Lemand, co-founder and CEO of Neovision Wealth Management. Ryan, thanks so much for joining us. Let's just start with some of the focus that we're seeing for investors right now. There is a broader concern around some of the AI spend, which we saw really contribute contribute to a lot of choppiness last week. You describe this current phase for markets as sort of a punishment phase. Can you explain where we're at right now and sort of how that's feeding into your own sentiment at the moment?
Absolutely. Absolutely, Jennifer. So just to give you some numbers, last month, the month of May, I have personally consumed 200 million tokens with my AI provider. I've paid $200 that month for my subscription. So the difference between the $5,000 of the consumed tokens, because 200 million tokens could cost $5,000. The difference between the $5,000 and the $200, the $4,800, is basically fueled and financed by VCs and by hyperscalers. If you look at the free cash flow difference between how much hyperscalers have made in free cash flow and how much they've consumed and spent on AI companies, it is negative today. So this is why today markets are punishing hyperscalers for this free cash flow consumption. These hyperscalers were profitable and interesting as an investment thanks to their free cash flow generation. But today they're consuming a lot of money into what I call a subsidy system, which is the difference between $5,000 and $200. And this subsidy system cannot continue for very long.
So do we continue to see a punishment, as you describe it, Ryan, across the board? Broadly speaking, we were talking about what we're seeing in Asia, a bit of a rotation right now, as Winnie was describing it. What's your expectation for how long this will continue?
I think the rest of the year will be very choppy, up and down, especially that most of the positions that have been taken, the new ones, are by retail, and they're mostly leveraged positions using leverage ETFs. And we've seen it in South Korea. South Korea is an exemplary market to look at it, where a lot of leveraged positions have come in through retail, and this is where the chop we're seeing, limit down, limit up, on a continuous basis. The US market is much broader, much bigger, so we see this effect in a much lesser way, but I think we will continue to be volatile until the end of the year, until an accident happens. So one of these AI companies shows serious weakness or fails, or until something changes.
So then where do you position, Ryan, just given some of the uncertainty right now? We mentioned we're at the end of the quarter. Where are you focusing in as you're speaking to clients?
This is the heart of the question. So we are institutional investors. We invest on behalf of clients. I have a lot of difficulty sitting in front of a client and justifying investing into the S&P 500 versus, for example, the Swiss index. Let's look at both. The Swiss index has gone up over the past 12 months by 19.5%. The S&P 500 over the past 12 months has gone up by 19.34%, which is exactly the same thing. One is very speculative, driven by leverage positions, by a technology that is yet to prove itself, prove its profitability, versus another market, which is chocolates, medicine, and very traditional sectors where people will continue to eat chocolate and will continue to buy medicine. So I have a lot of difficulty justifying one market over the other. So yes, we are, for example, in Swiss equities that have performed as good as the S&P 500. We're in gold as well. If you look at gold over 1 year, it has gone up by roughly 25%. That's more than the S&P 500. Over 2 years, gold has gone up by more than 70%, which is the double of the S&P 500 performance. We haven't done that well in Chinese equities, for example, but we continue to build positions because we believe we'll come back. And we are into emerging markets like Brazil, for example, that has a trade surplus.
And we are seeing gold marginally down right now, but still above $4,000. So still tactically positioned right now. Ryan Lemand, we have to leave it there with you, but appreciate you joining us, co-founder and CEO of Neovision Wealth Management. Ryan, thanks as always. Now coming up, Israel and Lebanon reach a framework deal aimed at paving the way to ending the conflict between the two nations. We'll bring you the latest on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Hezbollah says the Israeli army carried out attacks in Lebanon on Sunday, posing what it called a flagrant violation of the ceasefire. It comes as Israel, Lebanon, and the U.S. reach an initial trilateral framework agreement aimed at paving the way for ending the conflict between the two nations. For more, we're now joined by Bloomberg reporter Dan Williams. Dan, what more do we know about Israel's attacks on Lebanon, and how will this trilateral framework agreement actually work to end the conflict?
Jennifer, Hezbollah is talking about continued Israeli actions against its facilities in southern Lebanon, which, if you ask Israel, and indeed very likely if you ask the Lebanese government and the United States, which served as a mediator between the neighboring countries, such attacks are completely consistent with a ceasefire, now upgraded to a preliminary framework for peace between the countries. Beneath the surface of that diplomacy, if you look at the small print, it's actually designed to defang Hezbollah with a quiet consent of the Lebanese government, which has undertaken for years to do so, has not been able to, and apparently now feels confident enough as part of this new deal with Israel, again mediated by the US, to open up what's called trial areas or pilot areas where the Israelis would withdraw forces or refrain for attacks so that the Lebanese government could come in and prove its ability to keep Hezbollah dislodged. Those are areas in the south of Lebanon, traditionally the heartland of Hezbollah. So Hezbollah is not part of that ceasefire. It really doesn't have standing to talk about violations of the ceasefire. And there's a good deal of evidence that it's feeling the pressure from the upgrade of that ceasefire to a deal that could see it dislodged by its fellow Lebanese, the government in Beirut.
Yeah, one certainly to watch in the region. Dan Williams in London for us. Dan, thanks as always for your reporting. Now for a look at some of the other stories we're following in the region. The Saudi press agency says a helicopter operated by Saudi Aramco crashed on Sunday, killing all 14 people aboard. The state energy ministry says it happened in the Ras Tanura energy hub, and the victims were all Saudi nationals. It didn't give a cause for the crash. Aramco had only just resumed loading crude at terminals in the area for shipments through the Strait of Hormuz. Anthropic has won U.S. approval to restore some global access to its Mythos 5 AI model for what the Commerce Secretary calls, quote, certain trusted partners. Howard Lutnick says the company has made significant progress on resolving concerns about potential national threats. Anthropic disabled global access to Mythos 5 and a related model this month on U.S. government orders. Now, let's just take a quick look at where markets are positioned to start the week. As you can see, green on the screen for U.S. equity futures. Also, potentially a positive start in Europe for Euro Stock 50 futures. Potentially a bit more positivity from what was a very volatile session and a week last week for markets globally last week. Now, coming up, South Korea seeks to cement its technological edge against rivals with Samsung and SK Hynix poised to unveil mega AI investments. We'll unpack the details on that next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Diplomatic pause. Iran and the U.S. agree to stop attacks and resume talks following fresh strikes that threatened oil flows through the Strait of Hormuz. South Korea goes big. Samsung and SK Hynix prepare to announce more than $1 trillion in investments to keep up with demand for AI hardware. Plus, China turns up the heat on the EU, signaling Beijing can withstand a complete trade halt in trade with the bloc ahead of Commerce Minister Wang Wentao's trip to Brussels. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. We are starting the week off just waiting to see how markets will be positioned, especially given some of the choppiness and the volatility last week, especially with a number of the tech names that we focus on. Of course, the name of the game last week with the chip wreck that we were focused on. We will see whether or not that filters in to the week that is coming up this week. But right now we're seeing U.S. equity futures marginally up to start the week, up just over 0.6% right there, with S&P futures up. Still in focus, though, as I was just mentioning, though, the broader AI trade, especially given what we saw last week. Investors will also be focused on the close of the quarter and also the U.S. jobs report, which is coming on a truncated week for Wall Street in just a few days. MSCI Asia Pacific Index has now moved marginally lower, down just about 0.2%. We'll get more from Winnie Xu in just a few moments, but still a bit of a continuation from some of the sell-off that we saw last week as it pertains to the semiconductor and also AI-related names. In focus, of course, is South Korea, which has been the world's best performing index, the Kospi index. So we will see how that continues to trade throughout the week. Brent crude up just over 0.7%, pairing some of the gains that we saw earlier in the session. Of course, in focus is that pause in hostilities in the Middle East, keeping Brent at just about $72.50 a barrel there. And we also have the U.S. 10-year yield on the board up just about a basis point to trade at 4.38%. We will see, of course, we get some Fed speak throughout the week. And, of course, we'll wait to see how the jobs number comes out later this week. On Thursday, it's actually coming because of the 4th of July holiday. But let's check in on how markets in Asia are faring. It's been a few hours that they've been open. Winnie Xu is in Hong Kong for a closer look for us. Winnie, what are you watching?
Yeah, morning, Jen. We are seeing Asian stocks coming under a bit more pressure today as this rotation away from the tech stocks, which have been doing well so far this year. We're seeing investors rotating out of these names and into some of the underperformers this year. Now, that's why we are seeing the Kospi here down almost 2%, leading declines in Asia after having risen about 100% so far this year. And following that, we have Japan's tech-heavy Nikkei 225 down about 1% as well. But the outlier today is, in fact, in the tech stocks listed in Hong Kong. HS Tech here up almost 4%, a bit of a rebound after being in that oversold territory. And in fact, the stock did have its worst week last week, the worst since October. So a bit of that rotation as well. Now, we can see that here is the picture of the tech sector. Infotech here down about 1.6%. And that is coming as 8 out of 11 subsectors in Asia are rising. So the drag here, specifically in Samsung Electronics and SK Hynix, down about 5 to 6% each, is ahead of that announcement of a $1.3 trillion worth of investment over the next decade into expanding capacity into the country's southwest region. Now, that announcement is expected within the next 30 minutes or so. So we will be closely watching out for that, but some concerns around if these massive capex are running ahead of itself. Also a bit of a concern when it comes to how Apple is in fact looking to source its memory chips from Chinese chip makers. So the question is if these Asian chip makers are able to keep up with that pricing power. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong for us. Let's just stick with what Winnie was talking about, South Korea's tech sector. Local media is reporting that Samsung and SK Hynix are preparing to announce major chip investment plans that may total up to $1.3 trillion over the next 10 years. For more, let's bring in Bloomberg's Kat Barton, who is in Seoul for us. Kat, we heard just a bit from Winnie there, but what more can you tell us about this investment package? It's an eye-watering number that we're hearing about.
There's a lot of numbers floating around in local media, and we do have to wait another 30 minutes until we will hear from the president himself and hopefully get clarity on this. So President Lee Jae-myung is set to speak in 30 minutes from now. And then after he's given us some details, we're also expecting that Samsung Chairman Jae-won Lee and SK Chairman Choi Tae-won will also give more details of their company's planned investments over the next decade. But this is part of a huge push by the South Korean government to have more regional investment. Obviously, at the moment, semiconductors specifically, but other, huge other sectors of the the economy, it's all concentrated around Seoul, which is, of course, very close to the North Korean border. So the government is extremely keen to see more investment in the south of the country. What we're seeing in local media so far is that there could be multiple new semiconductor fabs being built in Gwangju, which is in the southwest of the country. So we're hoping to get a lot more details very soon on that.
How much do we know, Kat, how this fits into the president's broader strategy? You dug into it just a bit, but what more can you tell us about how this really fits into what we've heard from him and seen from him?
Well, South Korea is one of the countries in the world that is really benefiting the most from this AI boom. They are home to their these two huge chip makers, Samsung and SK Hynix. And it's also on the forefront in terms of debates about who benefits from AI. How should countries spend these huge bonanzas? We're looking at vast amounts of money going in, and South Korea is eager to make sure that everyone benefits, that the money is not just flowing to a tiny segment of society. So later today, after the president and the chair people have spoken, we're also going to be hearing from the president's policy chief, Kim Yong-bom, who has previously sparked debate by talking about a citizen's dividend, whether South Korea should consider something like that to use the excess tax revenues, which are likely to be record this year from Samsung and SK, to help benefit society as a whole. So this move today certainly fits into the Lee Jae-myung government's plan to share the benefits potentially, if possible, to make South Korea, a better place for all.
Do we know when we might see this actually dispersing and spreading equally amongst the various AI names that we've been watching, Kat?
We do not. I mean, the announcement today is not just Samsung and SK. There are multiple other companies involved, because obviously we also have Hyundai, which is a leader in robotics. So the government is looking at pushing these kind of titans, the chaebol, to invest outside of Seoul, and to try and push to do more. But obviously, when you're talking about building a new a semiconductor fab, this is decades, years of work, and we're talking about a 10-year investment plan. Actually, the numbers seem huge. The local media have been saying 1.3 trillion. But when you break it down year by year, we're talking about roughly the same kind of capex that they were looking at already for 2027. It's not out of range. It's about in the ballpark. So they are massive investments, but they're coming over a 10-year period, and we're not going to be seeing them immediately. It's definitely going to be coming over the years to come.
But still creating quite a bit of excitement for that announcement that is coming imminently. Bloomberg's Kat Barton, thanks so much. We'll wait to hear more on that announcement, as she was just mentioning, in just a few minutes. Now, let's get back to the energy story. Oil paired early gains after the U.S. and Iran agreed to stop attacking one another. The de-escalation followed flare-ups over the weekend that saw an oil supertanker hit near the Strait of Hormuz. Rong Wei Neo is Bloomberg's Asia oil trading reporter. He joins us now from Singapore. Rong, how is this agreement to stop attacking each other holding up so far?
Well, you can see from the oil prices, it's testament to how the market is reacting to the weekend tit-for-tat attacks, as well as the market's subsequent reaction to the supposed ceasefire that has happened between US and Iran following that spate of attacks over the weekends. Now, for now, the agreement seems to be holding up pretty well, but we do have to note that traffic through the Strait of Hormuz has kind of been impacted since the first strikes landed late last week. Well, of course, now oil has opened slightly higher than last week's close, which signifies that the market is still a bit trepid about the potential of supply disruptions, as well as traffic through the Strait of Hormuz being affected. Well, since the first strikes have landed last week, several shippers have actually took a wait-and-see approach as they set to reevaluate the risks taken on the risks necessary to transit through the straits. But of course, the traffic through the strait, even though it may have came down slightly through the weekend attacks, but it has not completely stopped. Right now, the traffic levels we are seeing is still much higher than what was happening at the onset of this US-Iran war. And shippers continue to evaluate and weigh the prospects of the upcoming peace talks between US and Iran, where both parties are expected to discuss a bit more on the details about managing traffic through the Strait of Hormuz. And of course, that would also lend further details and give further insights of how both countries plan to proceed in terms of unlocking technical details about other things, such as the lifting of sanctions on Iranian oil, which is expected to be a boon for supply in the market as well.
How much insight can you give us, Rong Wei, about some of the traffic that we have seen within the Strait of Hormuz? You mentioned what we've seen over the past few days, but can you dig into that a bit more about some of the activity that we've seen?
Right, so let's take a step back and talk about how traffic through the Strait of Hormuz has recovered since the US-Iran sides came to an interim peace deal and entered a period of 60 days of negotiation to kind of meet up more details about how they plan to bring this war into a close. Of course, traffic has increased significantly since then, which traffic came to a near standstill stop since the onset of the war. However, things started to slow down a bit when there were a bit more uncertainties emerging, such as the tit-for-tat strikes that I've mentioned earlier that happened through the weekend. One thing we do have to take note is that traffic through the Strait of Hormuz is not that straightforward. Right now, there's pretty much two passageways, one that is more closer to what the Iranian side is looking to police, and the other is something that the US side has been advocating. And of course, the International Maritime Organization has also warned ships that there could be about 80 sea mines that are still present in the Strait of Hormuz, which of course added to a bit more of the potential risks shippers will have to undertake when transiting through the Strait of Hormuz, which is why all eyes are on the upcoming talks and about how and the market will be looking forward to how both sides would come up with more details on how to police or how to manage traffic through the Strait of Hormuz. And hopefully this will give more clarity to those shippers which may be a bit more risk adverse, and they would have a bit more confidence to push ahead with bringing empty tankers into the Strait of Hormuz, as well as to lift crude and bring it out of the Gulf.
Absolutely. Bloomberg's Rong Wei Neo, thanks so much for joining us and giving us some more updates on what we're seeing with the Strait of Hormuz. Now, coming up, the EU's top trade official will meet the Chinese Commerce Minister in Brussels today as the bloc steps up pressure on Beijing over a growing trade imbalance. We'll have more on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Chinese state media has warned relations with the European Union could hit a freezing point, accusing EU officials of showing a lack of sincerity in early trade talks. The warning comes as the EU's trade chief prepares to meet the Chinese Commerce Minister in Brussels today to tackle mounting tensions over trade imbalances. For more, let's get to Bloomberg reporter Stephen Engel. Stephen, what more have we heard from the Global Times ahead of these talks?
Well, yeah, I mean, the Global Times put out a article essentially saying that the Europeans are coming across as insincere in the preparatory talks ahead of that meeting between Wang Wentao, the Chinese Commerce Minister, as well as the European, or the EC trade chief, that's Maros Sefcovic. They're going to meet in Brussels later today. And a lot is at stake. So it's a very complicated, intertwined story here where, of course, Chinese brands and Chinese products have been flooding into the European Union. And that's, raising some concern, obviously, for industries in places like Germany and elsewhere. And also, it's a bit complicated as well for the Chinese because they've spent several years while battling the tariff regime from the United States to build better relations with the European Union. In fact, there's been a parade of European Union leaders coming to Beijing in the beginning part of this year to kind of strike better commercial ties between the two trading blocs, but there's some difficulties over subsidies that the Chinese do give exporters into the European Union. There's also the issue in Hungary, where Viktor Orban's government, which was very friendly to Chinese investment and Chinese access into the EU, is no longer in power, and there's been some more, more hawkish rhetoric from the new government in Budapest. So again, that's the backstory. We'll have to see if we can get through some of that rhetoric and get to some agreements and face-to-face talks, because essentially the Chinese are saying the Europeans are only talking about access to rare earths and chips. They're not addressing China's concerns about everything from EV access and the details of the minimum price guarantee mechanism that the European Union had agreed to, but has not shared the details with the Chinese.
Yeah, and Stephen, we're hearing that the trade imbalance for the EU is, quote, unsustainable, is the way they describe it. What's your expectation then from what we could hear from both sides?
Well, again, the Chinese don't want just a meeting that doesn't resolve these difficulties, because, again, European leaders have basically just in the last week or so asked the EC to come up with some defensive measures to protect European industries. They've ordered the Commission to negotiate with China about the EU's trade deficit, which is now in 2025 $360 billion. But again, the Chinese are concerned that if the talks are just treated as a mere formality, they won't get some of their grievances heard. So it's an important meeting. How much it's going to resolve these bubbling issues is yet to be seen. But it's a conundrum for the Europeans as well, because on the one hand, they want to address these issues, but they don't want to be too vocal, too public with their criticisms, and basically get to the situation where the Chinese state media threatened the possibility of a freezing of commercial, if not diplomatic, ties.
Yeah, quite a lot to watch for. Stephen Engel. Stephen, thanks so much for your reporting. Appreciate you joining us. President Putin has acknowledged that Russia is facing persistent fuel supply problems, with motorists and businesses confronting long queues at gas stations. To stabilize the domestic market following refinery outages, Putin says a full ban on diesel exports is now under consideration. His comments come after Ukrainian drone strikes on refineries reduced fuel production. Also, Andy Burnham will pledge the biggest devolution of power in England in modern times in his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. In a speech today, the former Greater Manchester mayor will outline plans to boost local economies and jobs and tackle youth unemployment. Now, coming up, the former U.S. ambassador to the UN, Samantha Power, says there's been a dramatic decline in America's soft power since the winding up of USAID. More from our interview with her next. This is Bloomberg. On July 1st last year, the U.S. effectively ended operations of the United States Agency for International Development, cutting off most staff and moving it into the U.S. State Department. The former U.S. ambassador to the UN, Samantha Power, led the agency under President Biden until early 2025. She spoke to David Gura on the Big Take podcast about what she thinks was lost both internationally and at home. Take a listen.
We see with Ebola our rapid response capacity eviscerated. There are still individuals who call themselves people who work on Ebola, but they are too few, they are too dispersed, and many of them lack the expertise that was exported when the USAID staff was terminated so abruptly. The unseen costs are equally dramatic, and that ranges from girls who are no longer getting an education because USAID was either helping support a school to do that or leveraging its other programming in health or clean energy or agriculture to push a government to move in that direction. villages that won't be electrified. USAID, through its Power Africa program, helped connect about 150 million people to electricity. Most of that was in places that would never have been able to connect to the grid in my lifetime. Pop-up solar panels, private-public partnerships that allowed things to happen at a much more accelerated pace. So the soft power suicide for the United States, I think, is pretty obvious when you pull the rug out from programming of this nature with no warning, with no regard for the human consequences of those actions. That's going to cause, to say the least, a severe trust deficit. But I think when you go behind that as just an argument and think about the families that on a Friday were able to send their female child to school, and on a Monday suddenly found that that child was no longer welcome. The family member who goes to get antiretrovirals to treat HIV, which has now become a disease that you can live with, thanks to George W. Bush and the PEPFAR program combating HIV around the world, able to get their meds on a Friday, showing up on a Monday, the meds still available, but the pharmacy closed because the health workers laid off because of the cuts that the Trump administration made. So it's all system failure, an all system attack, and there's not one part of human development that has been untouched by this blunder.
That was former U.S. Ambassador to the UN, Samantha Power, speaking to Bloomberg's Big Take podcast. Now, a few other stories we're watching. Uganda's army chief, Muhoozi Kainerugaba, said he ordered the country's main independent media group to halt operations because of biased reporting. According to Kainerugaba's post on X, Nation Media Group's television station NTV Uganda and Daily Monitor newspaper will remain closed until further notice. Nation Media's outlets have had a series of disputes with the Ugandan authorities in the past. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.